Today's topic is the hunt for revenue, hot topics in tax controversy and IRS enforcement. At this time, I'm pleased to turn our call over to our first presenter, Patty Berquist. Patty?
Thank you, Allison, and good morning, everyone. I'm Patty Berquist, and I'm the leader of RSM's Washington National Tax Office, and I'm joined today by Alina Solichukova, who heads Washington National Tax's tax controversy practice. Now, we are both former IRS attorneys, and in this session, we're going to share with you our experiences with the IRS, and we will be giving you some insights and some tips on the current state of IRS examinations. And many of you are probably painfully aware of the delays in refunds and the delays in IRS service, even though it's a part of their name. Now, while the proposed budget increases should assist the IRS in sort of breaking through many of the log jams that they've been experiencing, it is also going to it will more than double their resource and make them much more able to staff their IRS exams and collection activities. So our objectives here today are to walk you through what you can expect from the IRS in the upcoming next couple of years, and how to prepare for these increased IRS activities. So we'll be talking about some priority issues, but we're going to walk you through the basics of an IRS exam with an eye to you planning how to manage that process. Okay, let's start with an overview of exams, and we want to have our first polling question. So we like to know how prepared you are to support your own or your company's or your client's IRS exam. Are you very prepared? You've been through several exams and feel comfortable representing your company or your client, or you're somewhat prepared. You've represented yourself or your company or a client during one or two IRS exams, or C, not prepared at all. I've never represented myself, my client, or a company during an IRS exam. Those are, count yourself sort of lucky if you haven't had an exam. But we'd like to give you another, say, 10 seconds to be able to respond to this polling question, and then we will look at the results. So we're really happy to sort of share our insights and help you get prepared here. All right. We're going to count from 3, 2, 1, and let's review the results. Okay, well, most of you have had an IRS exam before. I guess that's good news, at least for this. So we'll try to help you get even more prepared so that your next exam will be incredibly successful and making you, your family, your clients very happy. Okay, so I'd like to wake you up a little bit with this very colorful chart that really came from the 2020 IRS data source book, really taking a look at their examination year. Now, why? There's a lot going on here. I really just want to focus on a couple of things. The first thing, if we look at field examination out of this whole column, you can see that is very small. There are not that many field examinations. Correspondence exam is also very low. But if we look at the revenue, recommended additional tax and assessments from those two activities, we can see that is the bulk of the IRS's collection activity, if you will, from an examination through to making an assessment and getting collection. So that's why we're going to focus on those activities here today. Now, I'd like to start out by just sort of covering what are the types of IRS audits? Well, we have something called the AUR audit. It stands for Automatic Underreporter. And that means, hey, if you didn't report something that was on a 1099 or a K-1 that got issued to you, the IRS is probably going to send you a letter and say, hey, where was that interest income? God forbid it's a W-2 you didn't report. because there, of course, there is also a huge liability that's going to go with that for wages, et cetera. Okay, now, so those are pretty standard. A computer is who is doing the examination activity. Next, we have correspondent audit or office audit. These are generally smaller audits. The IRS agent is never going to come and knock on your door or your company's door or ask to even meet you. They just want to see, can you provide me some information? I'm questioning a deduction, or I'm questioning the failure to report something. And they're looking for you to come back and do some documentation, provide that documentation. Sometimes it's analysis. Hey, here's how I did this, and here's what this means. So I should be okay. And then the final, which is really what we're here to focus on, is the most intense exam, and that is called field examination. This is usually with complex and comprehensive issues, and it will be much more involved than any of the other exams we just talked about. Now, there are 3 phases, and this is really how we've structured this presentation, is we're going to look at the planning phase, the execution phase, and I know that's a weird word, so don't think of it in terms of an execution. It's really how the IRS is going to execute its exam. Okay, and then the resolution phase. All right, so let's get started. Spotlight on field examination. Okay, so let's say you've already been selected for an IRS exam. Now, that selection process may use things like data analytics. The IRS likes to use historically something called the DIF score, and that would sort of pop out returns that they say, there could be a question about this. Maybe you want to put it in the pile for potential examination activity. And once it sort of gets in that pile, then exam teams who have availability will then go to the assigning group and they will say, hey, give us some inventory. We're ready to start a new exam. And then they get to sort of choose what they want to look at. Now, there are certain other things that they might do. They may have notes in the file. There may be something like a campaign issue, and we're going to talk about some of those, that they can now identify. This person invested in a syndicated conservation easement. Let's examine them. Certain things like syndicated conservation easements have 100% examination, 100%. So now, once what does the IRS start doing? Well, if it's a public company, they're going to do things like look at SEC filings, reconcile those against the tax return and see, are there missing items? Have they covered things in their Schedule M3, in their Schedule M1? Do they have a Schedule UTP attached, standing for, abbreviation for tax positions that may have some iffiness about them. And then they're going to also look at campaign issues. Now, on this slide, we identify right here how you can find out, do I have a campaign issue? Because it's going to be important to know. It may trigger an IRS exam, and it clearly, if you are selected for exam, will be something the IRS wants to look at. The IRS collects data itself, and so they do have they're going to be looking at what they have in their system about the taxpayer, but they're also going to go and look at things like, let's look at this company's website. Let's see what they have that they say they're doing now and they're advertising to their customers about, and is that reflected on the tax return? So we always say it's important to know, if you're a company and you think you could be examined, make sure what's on your website is accurate and supportable. Okay? Now, they're going to look at media reports. In fact, there are people who do nothing but clip articles and look at what's online and say, hey, these are some issues that they've put in the media. So that's something we might want to look at. And if a company's been examined before, they're going to also see, do we have carryover issues do they still have the same issue we examined and made an adjustment on in the last cycle? Okay, so that's sort of the planning phase. Now, once you've been selected for exam and the IRS has done some of their planning work, they may be sending you, they will have sent you a letter, and they'll say, we're scheduling an opening conference with you. And by the way, we've attached an IDR and we'd like you to be prepared with these items. What's an IDR? An information document request. So when you come to the meeting, that initial IDR, they will be asking you to bring these things with you to the meeting. So what are the things that are going to happen here? Well, this is where the expectations for the exam are going to be set. There needs to be a communication person. Now, our suggestion to you, have only one point of contact. Do not allow the agent to have multiple points of contact within your organization unless that main point of contact allows it and prepares for it. I'll just give you a really quick example. This was many years ago, but there was a bookkeeper at a company. The IRS came in and was doing an examination. And for whatever reason, the bookkeeper got friendly with the agent. They started going to lunch every day. Pretty soon, this simple audit turned into an international audit. So you've got to control the communications and ensure that there's not just speculative information being provided by somebody that you don't know is communicating with the IRS. So also have the IRS point of contact. Who is the taxpayer going to deal with? And this is where it's important for your power of attorney to step in to sort of control the situation. So that POA, that power of attorney holder, that representative, is going to have an important role. Now, the opening conference is also going to talk about things like how we're going to do our information gathering. We're going to send you some IDRs. We may, I'm speaking as an IRS agent here, we may want to have secure email that we can send things back and forth. Now, they may say, I'm going to call you and I'm going to ask you to send me some information. If they do that, it's important for you to keep track of everything you send the IRS. So here is where you're going to memorialize what you sent them in writing. Just don't send them a piece of information, because you want to know, what have I sent them? What do they have? And you want to keep a record of that. Now, the opening conference is also going to tell you about some target dates, and this can be really important. They may want to say, well, we know your statute's going to expire in about 9 months, and we'd like you to extend the statute. This is an important consideration that you need to realistically and reasonably put together what you think is a proper statute extension. These items can be negotiable, and so it's important to try to figure out, when's this examination going to be done? They're going to tell you, this is when we anticipate issuing you our last IDR. Important to get that, in writing, so you can plan. You can plan how this is going to go. You may also want to talk about any notices of proposed adjustments, also called NOPAs. And one thing that we might recommend is that you request that when they're done looking at an issue, that they send you the NOPA, because that NOPA opens up some opportunities for you that we'll talk about in a few minutes. One is called fast track, and the other is called early referral to appeals. You can take that issue and say, I'm going to try to get this issue resolved right away. So as the taxpayer or as a representative, your role really is to develop a working relationship with the team. You want to know how many specialists they have, who's coming out. You want to make friends with all of them so that you can call upon them when you need them. When you think, oh, this agent, this examiner is a little out of control, you want to be able to go to the supervisor and say, they're sending me these IDRs that are not appropriate. So let's talk about it. And we'll start talking about appropriate IDRs in just a minute. But it's really important for you to set forth your role as the representative of the taxpayer under exam. Okay, let's continue on. Some important considerations to think about. Before you're your return is up for coming under exam, you better review it carefully. Make sure I've not omitted anything. Maybe there's a position I should have disclosed and I didn't. These are things you've got to consider. There has been historically the opportunity to correct errors penalty-free by telling the IRS about it. There was a revenue procedure, 9469. It's been in play for a long time. As the IRS has reorganized itself over time, it has considered, do we want to get rid of 9469? And oftentimes, because it gives you this 15-day disclosure period, the IRS is getting an issue. They know, I know an issue, an adjustment I'm going to propose. This is a great thing. I don't even have to examine it. And in exchange, I'm not going to impose the accuracy-related penalty on that issue if it's applicable. And that's a 20% accuracy-related penalty. Now, currently, and the IRS has done this over time, routinely, it has said, should we get rid of 9469 or keep it in play? So far, they have decided to keep it in play, but just be prepared that the IRS may make a change to that. Now, the other important consideration to think about is what happens if I discover an issue that I could file a claim for? I can raise that during the examination, and that's a really good thing because the IRS can make the adjustments as a part of the examination, either reducing any adjustments that they have because it's going to be offset against them, or maybe at the end of the day, you're going to get a refund. Well, there is a rule. The taxpayer only has 30 days from that opening conference to submit an informal claim for a favorable adjustment on an issue. Now, why is this important? Well, if you don't do it within that 30 days, you need to file an amended return, an 1120X, a 1040X. Now, why is that complicated? Well, you might have to file a state return before you even know if the IRS is going to give you that refund, and it's going to require, at least one other amended return, maybe 50, maybe more amended returns. So you want to be in this affirmative claim process where the IRS is looking at your issue and they say, okay, I'm going to grant it or I'm not going to grant it. If they grant it, then cool. You'll file amended returns because you know the IRS is agreeing with the issue. And then that will be sort of your duty to do so. But if they're not agreeing with it, you have not wasted time and expense in filing an amended return for an issue that the IRS is not going to agree to grant you any relief on. Okay, so now IRS develops issues through issuing IDRs. And this is an important thing to think about. The IRS, that first IDR that you get with the opening conference letter, that can be sort of it's just an information gathering. It's a background information IDR. But after that IDR is issued, if you are in large business and international, then the issues must be issue focused on the IDR. And this is really important to remember. If they don't issue you an issue-focused IDR, you need to go back and say, hey, this was not issue-focused. I need to know what the issue is and how what you're asking me for is going to relate to that issue. So it is very important. Sometimes we've had to go back to the supervisor or the manager and say, we've got these 6 IDRs. None of them tell us what the issue is. These need to be issue-focused. And guess what? They will withdraw those IDRs and then be able to tell you the important piece. What's the issue? And why is what they're asking for relevant to their determination on that issue? Okay. Now, second polling question here. All right. If the IRS issues an information document request, an IDR, that is overly broad, does the taxpayer need to comply and provide all of the requested information? Here are your answer choices. A, yes, because the IRS is in a position of power and the taxpayer must always comply. B, no, the taxpayer can request that the IRS tailor the IDR request to focus on the issues that are under exam. Or C, no, because compliance with an IDR request is optional. Okay, so there's really only one right answer here. And we're going to give you 3 seconds to make your selection. It doesn't matter if you're right or wrong. We're going to talk about it. So 3, 2, 1. All right, let's see the results. Okay, smart audience here. 85% of you, 86% of you got this right. Note that IDR responses are not necessarily optional. The IRS can issue a summons if you don't respond to the IDR. So that's why it's important to follow the advice in B, get that issue-focused IDR, and get it to be something that you can respond to. Okay, let's move on. So one important IDR to be wary of is something called the AOF, the Agreement of the Facts IDR. So this is an IDR that's usually after the IRS has finished its work on a particular issue, and it's going to say, all right, here's my AOF IDR. I need you to agree. If you agree, sign it and send it in. Okay, big red flag, don't operate in that way. You read the facts. The IRS may have missed facts. They may have misinterpreted facts. They may have put in erroneous information based on what they have. It's not like they're trying to trick you, but the importance of the AOF IDR is streamlining the examination so that if this case goes to appeals, you're locked into what is in that AOF IDR. So our recommendation to you is comprehensively respond to the AOF IDR and have the taxpayer's version set forth. I typically, and probably Alina, you might also say the same thing. I rewrite it. I rewrite the facts. I make the facts as I know the truth to be, and that's the version that I'm going to submit to the IRS. Okay, because the important thing is any agreed facts are going to be very difficult to deny when you go to appeals, IRS appeals, or to litigation. Okay, now we're moving to our third phase of the exam, and that is resolution. There are a couple of approaches. One, you've got resolution without litigation, and two, you've got resolution with litigation. So first of all, if you disagree with what the IRS is saying and there's a technical issue, you can request something called National Office Tech Advice. Now, if it's a little risky because the National Office Tech Advice is going to be binding on the exam team. It's not binding on appeals, but appeals could be swayed by it. So if you win on the tech advice and the IRS agrees, that the Chief Counsel's Office agrees with you, great, you got a slam dunk winner. Exam must follow it. But if they support exam, that makes it a little more difficult, and you have to be ready to resolve it at appeals or beyond. Something called fast track resolution. It's a great process. It is a non-binding settlement process for single or multiple issues. But you don't want to get too complicated. If you've got 10 issues, you can't go to fast track on 10 issues. But what happens is your case gets resolved by an independent appeals officer coming into the case, and you have a session, a fast track session within 120 days from the date of the acceptance of the case into fast track. You are only required to respond to the 5701 that you've received, the NOPA, the Notice of Proposed Adjustment. And so it's a limited response really relating to that issue. You can reply with facts, with technical merits, and then you make a request for fast track. That case is almost like a mediation process where the appeals officer comes in, wants to try to settle the case with the taxpayer, and then sell that settlement to the exam team. Exam is there During the process, there's a plenary session where everybody's there together. Then everybody divides up into their own little separate rooms. And the appeals officer will come into each room and say, all right, here's how I see your case. What do you say? What do you think? You know, and they will do the same thing with exam. And ultimately, at the end of the day, you're going to hopefully have a settlement of that approach. Okay, if you're not in fast track, and if you've gotten a 30-day letter, you're not eligible for fast track, but you're still eligible to go to appeals. You go to appeals, appeals is going to attempt to resolve this case on the basis of hazards of litigation. So the technical merits and the facts that come into play. But beware that AOF IDR response can limit your ability to, change the facts or to interpret the facts, by saying they're missing something. Should have been in the AOF response. And then finally, what if you say, all right, yep, I agree, exam. I'm going to agree to these adjustments. Well, you could have a closing agreement, which is a binding agreement between the taxpayer or the IRS. And that is pretty much written in stone, okay? You can also agree to the adjustments using an 870 that says, all right, I'm going to agree, you can assess these adjustments, but then next month I'm going to file a claim for refund because I want to go to a different forum for resolution of this case. Okay. Then we also have litigation, and litigation can occur in the tax court, the federal district court, or the court of federal claims. Now, the district court and the court of federal claims are refund jurisdictions. So they're going to look at, the federal court of claims can also look at deficiencies, but the tax court is not a refund forum. It's a deficiency forum. Don't have to pay to go to the tax court, and you're going to have tax attorney judges who know tax, and they're going to decide your case. The federal districts, you could have a judge that hears all different kinds of cases. You have to pay the deficiency or a portion thereof, it's an employment tax case, and then sue for a refund. The same thing with the Court of Federal Claims. It's also, you have to pay the deficiency first and sue for a refund. So those are the big differences there between litigation approaches. Okay, now I want to just really quickly cover a couple of things. Key players on your IRS exam team. I think you just need to, refer back to this. You can have an LB&I, large business and international. You're going to have a team manager. You might not see them very much. The team coordinator, you're going to get very close with. And the revenue agent is the one who's really going to be doing the work, but the team coordinator and the team manager may help make decisions on the case. But that's not all. You could have all different kinds of specialists. You'd have a computer audit specialist who's going to come in at the beginning of the audit and sort of look at your financial statements, do some testing, figure out whether or not they think there's some issues for the IRS to look at, and there you have it. They can also help in certain other computer record approaches that the exam team wants to use. You may have an employment tax specialist. You may have an economist or an engineer. They might be focused on valuation issues. For example, if it's a research credit case, though, they're also going to be involved with the technical side of what you did and how the research was being conducted. Now, if you have an international or a global company, you're likely to have an international examiner. They may be doing the transfer pricing analysis. They may use some specialists like economists to help them with that. And then you will have a technical guidance coordinator who is available by phone. Sometimes those people are very well engaged in issues and they are knowledgeable, and some have just raised their hand and said, I'd like to be a technical guidance coordinator in a particular issue, and their knowledge may not be that great. So I'm going to say, if you have one of those, look carefully, make sure their conclusion is correct, because sometimes it's not. And then there's something called an IPG, an issue practice group, and that's sort of informal advice to the agent as they're working the case they can be made available. Now, I told you Alina and I were IRS counsel people in the national office, and we would have been responsible for issuing guidance like chief counsel advices, GLAMs, which are part of the litigation process, and national office tech advices. Back in the old days when I was there, we also did something called field service advice, and that was directly to the exam teams to tell them what position they should be taking in litigation. Okay, now here's the big issue. Who's in charge? We just saw that huge team. Who is in charge? Well, in the past, the team manager typically had a 51% vote on raising and resolving issues. So of course, we're looking at Congress today. That means they're in control, okay? However, today, each manager within the examination team has an equal say. So when I showed you this list of people, all of these people, each one of them, there's an economist manager, an engineer manager, an international examiner manager, and they are the people who have an equal say with that team manager on how a case should be resolved. It makes things a little bit more complex, and it's just something to be aware of. So issues get resolved by a consensus of the group. You can have influence on them, but they're going to be the ones making the decision. So that's why it's important. Taxpayers and representatives should develop relationships with the team members. I'm not saying go to lunch with them. I am saying just get to know them so that they know who you are, so that you have input during that process. Okay, now I'm going to turn it over to Alina to walk us through various things that are impacting IRS exams today, including the budget, enforcement activity, and certain priority issues. So take it away, Alina.
Thank you, Patty. And good afternoon, everyone. Yes, I'm going to talk about the IRS budget and impact of the budget on the IRS's enforcement activity. And there is a lot of development in this area. If any of you ever turn on TV, that's all you hear about, right? The IRS increased budget. There is just so much talk about it. So will this increase in budget really result in increased examination activity, enforcement action, and collections? That's what we are going to discuss in the next 30 minutes. As many of you probably know, appropriations for the IRS have fallen by a total of about 20% in real dollars between 2010 and 2018. With the exception of the tax year 2016, real appropriations have consistently fallen below the previous year's level over this period. But in the past 3 years, if you look on the slide, I have numbers on the slide, and you can see that in the past 3 years, the IRS's budget has been steadily going up. But still, it's still down if you compare it with fiscal year 2010 when you adjust these numbers for inflation. Because the labor costs account for about 70% of the IRS's budget during these difficult times and budgetary constraints, the IRS had a hiring freeze, so they weren't able to hire new employees for many, many years. During that period of time, they have lost about 22% of their workforce. And 30%, there was a 30% decline in the number of employees working in enforcement roles. Also, in addition to budgetary constraints, IRS wasn't able to update its IT system. And we've heard a lot of stories about how old and outdated the system is, and it needs to be updated as soon as possible. In addition, in July of 2019, President Trump signed into law the Taxpayers First Act, the purpose of this act is to improve IRS and to improve taxpayers' experience. The act consists of many provisions, including certain mandates to improve taxpayer experience. To be able to implement those provisions, of course, IRS needs additional budget. So with this short introduction, you can see how much IRS needs this increase in budget. The fact that the IRS had so many depletion in its employee force resulted in low examination rates. You can see on the slide that the examination rate of corporate audits and individual audits is under 1%, and this is down 37% since 2010 for corporate audits and down 48% for individual audits since 2010. So for this reason, obviously, and another thing that we keep hearing over and over again is the tax gap. And the tax gap is the difference between the tax that is actually paid to the IRS and the tax that should have been paid to the IRS, right? And TIGTA, Treasury Inspector General, conducted the analysis and determined that the tax gap is approximately $441 billion each year. And they looked at 3 years, 2010 through 13. So it's a huge gap. So the Biden's administration is saying to address all of these issues, IRS is in desperate need of the budget increase. So as you can see on this slide, the first line, the current proposed budget that was passed by the U.S. House of Representatives is $13.6 billion. This is a $1.7 billion increase from the prior year budget. And this budget of $13.6 billion will allocate money between the 4 programs or 4 buckets, however you want to call it. $2.9 billion will be allocated for taxpayer services. That is a $385 million increase. So this is $385 million above 2021 levels. $5.8 billion for enforcement. So that's, again, a huge increase of $538 million from over FY 2021 budget. 4.6 will be allocated for operation support. And again, it's an increase of $650 million over FY 2021. And the 4th bucket is $305 million will be allocated for business system modernization. So this is something that improvements to IT, IRS's IT system. This next slide will show you partnership examination rates from 2015 through 2018. So these are exams under TEFRA, not under VBA, and you can see way, way, way under 1%. So with this increased budget, what can we expect? The IRS is already saying that they are planning for the next 5 years. They are planning to hire 50,000 more employees. 50. There are 2 big divisions within the IRS that we primarily deal with, right? It's Small Business and Self-Employed Division, SBAC, and Large Business and International, LBNI. The difference between this decision is SBAC is dealing with taxpayers whose assets are under $10 million. LBNI deals with taxpayers with assets over $10 million. SBAC announced that they plan to double their workforce in 2022. LBNI right now has 5,000 employees, so they're back to where they were 5 years ago. So both divisions are hiring. SBAC also announced the areas that they're going to be focusing on, and they've already said that fuel tax compliance is of interest to them, something that's been dormant for a number of years. They will continue examination of syndicated conservation easements. As Patty said, that examination rate is at 100%. Micro-captive insurance transactions, employment tax exam. I personally am seeing a lot of employment tax examinations that are ongoing, a lot more than in prior years. High income tax individuals, I'm going to talk about it a little later. I'm going to devote a couple of minutes to that area because it's a huge focus of the IRS. So LB&I, as Patty said, campaign issues. So the way the LB&I division of the IRS selects its cases for examination is based on the campaign issues. It's the issues that they have identified that they are seeing that taxpayers are mostly non-compliant with, right? Global high wealth examinations, I'm going to talk about it a little later. That's an initiative right now that is ongoing at the IRS. Backup withholding initiative. It's something else that the IRS revived. It used to be dormant. They hired more employees and they're enforcing backup withholdings. TCJA campaign, large corporate compliance program, VBA Partnership campaign is a huge area of interest, and IRS hired 50 additional employees just to conduct VBA partnership exams. Large partnership compliance program, I will have some information about this for you a little later. Before we go on with the presentation, I have a polling question here, and it looks like you've already responded to it. How concerned are you about IRS potentially increasing enforcement activity in near future? Are you very concerned? Are you a little concerned, but you feel prepared for a potential IRS exam, or you are not concerned at all? All right, so I'm going to keep it on poll for a little bit to just give you an opportunity to respond. And as soon as you respond, we're going to talk about the global high wealth campaign and the high income initiative at the IRS. So I'm going to give you a couple of more minutes. And in 1, 2, 3, I'm going to close this poll. And you are a little concerned, most of you are a little concerned, but you feel prepared for a potential IRS exam. And this is great news. And 12% are not concerned at all. All right, so this is a big initiative at the IRS right now, and it's a global high wealth initiative. This is for the businesses and individuals with assets and earnings in tens of millions of dollars. The IRS is taking a holistic approach here. And you might be thinking, oh, it's something new, right? Because we're just hearing now about it, that the Biden administration is talking about high net worth individuals and how they need to pay their fair share. But in fact, this global high wealth group within the LB&I, it existed since 2009. So these examinations were ongoing since 2009. So it's not anything that that is new. So it usually starts with an examination of high net worth individuals, but then it can spread to the enterprises that these individuals control. And it involves usually subject matter experts, obviously, because there can be so many issues, right? The individuals can have interest in C corporations, S corporations, partnerships, private foundations, in a state. So for all of these issues, they need to involve subject matter experts to assist the examiner with the primary examination. Usually, these are very involved examination, and they have a 2-year cycle. So it's on average, it takes 24 months to get through this examination. And again, they are under jurisdiction of LB&I. The procedures are the same as Patty described. There is an information document request. If individuals have interest in foreign entities, there may be some exchange of information with foreign governments involved in this type of examinations as well. The next initiative that I wanted to talk about for a moment here is high income initiative. How is it different from the global high net worth? It's a little bit lighter, you can say, because the threshold is that the taxpayers must have $200,000 positive tax income to be in this group of taxpayers. The tax positive income is basically all of the income that the taxpayers earn from various sources, and it excludes losses, right? So again, it can involve the examination of flow-through entities that these individuals can have interest in. Primarily, these examinations are conducted by SBSC. Also, a part of this inquiry or initiative is looking into the high-income non-filers. So it's those people or individuals who used to file returns but then chose to stop filing. So IRS identifies those and issues inquiries into this taxpayers. The examination cycle is a little shorter. It's about 18 months. It takes 18 months to conduct this examination. And again, involvement of specialists, it can be all sorts of specialists. It can be oil and gas specialists. It can be payroll and excise tax specialists, financial product specialists, right? Depending on the issues that are identified and depending on the triggers for this examinations. The triggers for this type of the examinations, in my experience, are usually, for example, a sale of partnership interest. It's something big like this has to happen, or large Schedule C losses, or cryptocurrency reporting on the return, or large charitable deduction. So there's got to be some trigger for this examination. Large corporations. So again, we've heard from the Biden administration, huge interest into enforcement and getting more large corporate exams conducted, because there was an established correlation between the number of the IRS's audits and the revenue that the IRS collects. There was a huge drop in large corporate examinations, and the IRS wants to change that. There in 2019, IRS came up with the Large Corporate Compliance Program that replaces Coordinated Industry Case Program and uses data analytics to select large corporations for examination. It actually uses what they call a pointing system, depending on the complexities on the return transactions that the taxpayer was involved in. The IRS gives points. For example, there is 10 5471s attached to the returns. So that's 10 points. Depending on the revenue, depending on the assets, there will be points added to the return. And once you are above 15 points, you're in the pool of this LCC taxpayers that may be selected for examination. So that's how this is done. And after this taxpayer is selected into the pool of the large corporate taxpayers, then this return is analyzed and put into certain category of risk. After the risks are identified, the LBNI manager will be determining the scope of the examination. So as I mentioned before, VBA Partnership Examinations, huge interest there from the IRS, different procedures, centralized audit regime, where the proposed adjustments is done on the partnership level, at the partnership level, and IRS has authority now to collect from the partnership, as opposed to when the exams were conducted under TEFRA, the IRS, it was very burdensome for the IRS to collect from each of the tax-paying partner, right? So now it's easier process for the IRS. They want to increase partnership examinations, and Joint Committee on Taxation estimates that the VBA provisions will raise approximately $10 billion over the next 10-year period. So we can definitely expect increased examination activity of the VBA partnerships. Recently, on October 21st, and this is kind of very, very new, IRS rolled out a pilot program for large partnership, for large partnerships. And it's Large Partnership Compliance Program, LPC. It has 4 stages to it. The first one is identification, where the IRS is saying they will be using certain criteria. They did not tell us what the criteria is, but based on various presentations done by IRS's officials, it's going to be the amounts of assets, revenue, size, volume, and size of foreign investments. This is the criteria that will be used to identify the taxpayers that belong in that initiative. After that, there will be modeling and classification. So it's basically the risk assessment. How risky are the positions that were taken on the return? Then the third phase of this program will be exam procedure. So the large partnerships will be examined. The same Internal Revenue Manual provisions that apply to regular VBA examinations will apply to large partnership examinations. The interesting thing here is that after the large partnership is identified as having some risks on the return, it must be examined. So there is only one treatment stream, so to say. So they must be examined, and those issues that were identified by data analytics will have to be looked at as well. So that I found very interesting. I believe that that will cause these exams to be very lengthy. Again, this is a pilot program. It's going to be ongoing for 2 years, and then the IRS will reevaluate, either make it permanent or do some changes to the program. And the fourth stage of this program is that the IRS will solicit feedback from the examiners during this 2-year period and will adjust its data analytics accordingly. So it will be a smarter process of selecting these tax returns for examination. So when looking at the corporations, partnerships, and individuals, in our practice here at RSM, I just listed those issues of interest that we're seeing over and over again that are coming up. And if you know that you have those issues on your tax return, maybe it's time for you to sit down with your tax professional and identify those issues as maybe soft issues, consider filing qualified amended returns, and so forth. So for the partnerships, I'm seeing a lot of VBA partnership examinations that are triggered based on the sale of partnership interest and reporting of gain or loss. So whenever there is a sale of partnership interest, there is a lot of chance that this tax return will be selected for examination. Again, syndicated conservation easements, we said several times, 100% of those are being looked at. Pass-through entity, substantiation of basis. This is crucial. So it can either be a partnership or an S corp. So whenever your client or you are taking a loss, think about basis. Do I have enough basis? For the basis, you need to substantiate it not only with the Excel spreadsheet schedule, but underlying documents. And sometimes I have, taxpayers that made an S corp election, let's say 60 years ago. Do we go 60 years back to bring all of these documents to substantiate the basis? So it gets very tricky there. And you definitely need a consultation with the tax professional as to how you will respond to an information document request that requires substantiation of a very old basis. Individuals, the issues that we're seeing is large charitable deductions can trigger examination, and it's something that the IRS is looking at. Material participation, and here IRS is looking at the detailed time logs and calendars. Hobby losses versus business losses, big issue right now. So the IRS looks at certain types of activities that the IRS has suspicions about, and that it would like to challenge. Self-employment tax for partners. So sometimes we have situations where there is a limited partner and he or she is actually functioning as someone who may be subject to self-employment tax. So those are issues that the IRS is looking at. On the corporate side, as you know, based on the CARES Act provision, corporations now are allowed to carry back losses from 18, 19, 25 years back. That reopens the statute in the carryback years. Both the loss year return and carryback year can be subject to examination. The losses can be carried back on the tentative, on the Form 1139 as well as Form 1120X. With the 1139, the taxpayers get the refund first, but then it can still be subject to an examination. With 1120, the IRS examines returns first before issuing you the refund. But again, there can be exposure in the loss year because of the statute will be reopened, right, in those years. And it's different exposure for 1120X and 1139, depending on what vehicle you use to carry back the loss. International issues are huge. IRS is always looking at those. With foreign tax credit, the challenges that I'm encountering in my practice is that substantiation can be difficult because the documents can be, like I recently had a case in Chinese. So IRS is, asking for translation of those documents to make sure that the tax was paid in a foreign country. So how do you prepare for the IRS examination? And as I mentioned earlier, meet with your tax advisor, knowing what you know now about the campaign issues of interest, various initiatives that are ongoing at the IRS. Think about what's on your return. Maybe it's time for you to file a qualified amended return, and that is any return will be a qualified amended return if it's filed before the IRS commences examination. And that will provide protection from the accuracy-related penalties if your return is later selected for examination. Identify issues that you have support for, but that the IRS can challenge. And consider filing the Form 8275. That's a disclosure form, and it can be filed with an amended return. If you have any formal opinions that were issued to you by your tax advisors, put them in the file and keep them handy. That will help you to show reasonable reliance on authorities and advice of your tax professionals. So we have the last polling question here. We have done the risk analysis of the tax returns for the open tax years. Is it true or false? Are you prepared? Have you done your risk analysis? Are you ready to go? I'm going to give you a couple of minutes here, and while you're responding to this question, I'm just going to remind you that we prepared what we call an audit survival guide, which is a booklet that will provide you guidance and will guide you through the IRS examination process, at the stages of examination process, different tricks as to how handle different stages of the examination process and so forth. It's a very interesting read. You can upload it from the resources center that is available on the website for the Tax Summit. And with that, I'm gonna close the polling question, and it's 50-50. So half of you are prepared and have done the risk analysis, which is good, great, kudos to you, but half of you are not yet prepared for the IRS exam. With that, we will, okay, we have one more question. I guess it's a soft question. Would you like to talk more about this topic with an RSM professional? So if you can respond to this question, well, I will advertise our future sessions today. At 1 p.m., we have a session on tax disputes and controversy. And at 2:30 p.m. Eastern Standard Time, we have a session on pass-through entity taxes at the state and local level. And thank you for your attention today, and have a great day.
Thank you so much, Alina, and thank you to Patty. Oh, Patty, go ahead. I'm sorry. Go ahead.
No, I was just going to say that we'll also be over in the lounge to meet with you and maybe answer some quick questions, too. So, Allison, sorry. Please go ahead.
Thank you so much, Patty, and thank you, Alina, and to our audience for joining us. As Patty mentioned, the networking lounge is open and available. You can join them in there for additional topic conversation, and of course, join us for the remaining sessions that we have available today. If you have met CPE criteria, you may download a copy of your certificate by visiting the Certification Center and clicking the download icon. We also invite you to participate in the attendee survey by following the link in the resources list to the right of your screen. Thank you so much. We look forward to participating in our next Tax Summit Week event. Have a great day.